Hey guys, and welcome to the Working Money channel. So today, guys, not too different from yesterday, the crypto market has seen a downward turn. Market cap right now sitting at about $1.4 trillion. Bitcoin is going down with altcoins. We haven't seen Bitcoin dominance really waver, so Bitcoin dominance still sitting at about 41.4%. And you can see it here, a sea of red. Bitcoin down 5.2, Ethereum down 1.6. We got BNB coin down 5.9. XRP's down 4.97. Down here, guys, UST coin. That is the Terra USD pegged stablecoin. It is sitting now at around 90 cents, but it did go as low as, I believe, 64 cents. And so you think to yourself, well, how does a stablecoin actually do that? How does it lose its peg? Some are even suggesting that this is partially responsible for why the market is turning down. And I'm going to explain that, guys, in a little bit. Even if you look at Terra's Luna coin here, it is down a whopping 51.78% compared to the rest of the crypto space. So why is that? Is it having an effect on the market? Is this something we should be paying attention to? Are there going to be broader implications? All things, guys, that I'm going to cover in this video. Dylan LeClaire here says highest volume day of Bitcoin on Coinbase since May 19th, 2021. So if we just take a look really quickly, you know how I've been talking about low volume days in the crypto space. If we take a look at the Coinbase Bitcoin chart here, so this is Bitcoin trading on Coinbase here, and you can take a look. Just down here, you can see the volume bars. You can see a very high volume bar, something that we have not seen since over here, May 20, I believe it's May 21st over here when we were witnessing this high volume trading event. Then we saw nothing but really, really low volume. And then again, yesterday, a high volume spike. So Bitcoin, it's interesting because, Bitcoin, although we are seeing the markets turn bearish, Bitcoin still has not taken out its low from back last year, from back in June of 2021. So technically, and I know for all intents and purposes, this is a very bearish outlook, but technically, we are not actually bearish yet. I know, that might sound ridiculous. I know, you guys are probably going, Working Money channel, you've lost it. XRP though, okay, XRP has taken out this low here. The low of about 51 cents here. Let me just draw a line here on the XRP chart. So it did take out this low, however, let me just zoom in there real quickly to show you guys. XRP today is now trading above that 51 cent mark, or 50.5 cent mark. So we did close below it yesterday. However, we are now bouncing up above that level of support. If I throw XRP here on the hourly, you can see it a little better. You can see that we have V-bottomed out of that, or actually double bottomed out of that. And now we're trading up here, double bottom out, forming what is looking like a bullish pennant pattern, which hopefully suggests a move to the upside. I mean, how long that will sustain, it is anybody's guess. And just looking at Bitcoin here on the hourly as well, just to give you guys some context, looking like Bitcoin is creating that inverted head and shoulders pattern. Did trade back up all the way to about 32,500, and right now it is sitting at 31.3, so $31,300. And of course, you are going to get Bitcoin bulls, i.e. El Salvador, buying the dip. This coming from Michael at Val5 Links, guys. El Salvador buys the wild Bitcoin dip with 500 BTC purchase. So in a nutshell, El Salvador has bought the dip. They bought 500 Bitcoin. The Bitcoin purchase bolsters the already stacked reserves of El Salvador with a total of 1,620 Bitcoin, currently valued of just shy of $50 million at the time of writing. President Nayib Bukele has a proven track record of buying the dip when Bitcoin flash crashes occur. So, this is the next question. Is this just a flash crash, or are we going to see more doom, more gloom to the downside? An important perspective here from Otavio Costa. Always important to put things into perspective. The NASDAQ has already declined almost as much as it did back in March of 2020. Now, you guys remember March of 2020 here. Let me just bring up the NASDAQ real quickly here, and I'll throw it on the daily for a sec. So the NASDAQ back in March of 2020, as you guys can see right over here, this is the crash that he's talking about. And if you guys take a look on the chart here, it did crash about 30%. And take a look at where we are at now, negative 27%. So he says back then, the Fed was all about saving the stock market and the economy. Of course, that was, the beer flu shutting down economies around the world. The NASDAQ was no different. But today, it's a bit of a different story. Today, it's all about how much more they are going to raise interest rates. So this, to me, black swan event, of course, the V-bottom out of that, and we did make new highs. The stock market did do very well over the beer flu pandemic years. But now, guys, a crashing structure to the downside. The retrace trying to get back up. This is looking more along the lines of what a real crashing structure looks like, not a black swan crashing structure. And so important to put things into perspective. And there's also this talk about Luna. I don't know if you guys have been on crypto Twitter, but Luna getting smashed up. What happened? As I mentioned at the top of the video, Terra Luna's coin is down 51% compared to the rest of the crypto market. I mean, everything is down a little bit, but Terra Luna and even USDT down 9%, so trading at 90 cents. But, like I said, it was down to, I think, 60 cents UST coin to the USD. Is there a pairing there? Yeah, take a look at that. Wow. Take a look at that here. I'm going to throw it on the hourly. We can't really glean too much, but you can see it just kind of dropped off a cliff here. 75 cents, so maybe it was 75 cents, 74 cents, and now it's trying to climb back up here. Now it's trading at about 89.5, 90 cents. So what happened to Luna, and is there an explanation for this? Kenwood Capital also bringing this to our attention. Binance did suspend Luna trading and UST withdrawals amid the market turbulence. So not going to get into the article. I will link it in the description for you. But you can see how there was a lot of market activity, a lot of trading activity surrounding Luna and UST. Even the blockchain backer was bringing this up. Terra's UST stablecoin has lost its peg to the US dollar, currently at 70 cents. Instead of $1. And he's also bringing up a chart here, UST to Tether chart. He says, which has caused a massive surge in BTC UST, not Bitcoin valued in dollars, but Bitcoin valued in UST stablecoin. So what he is suggesting here, and what other people have been suggesting on Twitter, is that now investors are moving to safeguard Bitcoin into UST. However, fundamentally, if there's a problem with UST and that Bitcoin liquidity has just come out, how is this going to affect the market? And is this playing a role in what we are seeing here? It's still going. He says this is going to be a big thing for politicians. Man, oh man. And what he means by that, a big thing for politicians. Actually, first, let me get into this. Unusual Whale here posting this. So Luna emptied their Bitcoin reserve wallet at $1.4 billion. So not only that, Luna is also emptying their Bitcoin reserves. Bitcoin is down to 31,000, at least as of the time of this post. Terra is down 32%. Terra UST is down to 95 cents. So everybody here, it seems, on Twitter is talking about this. Why is it such a big deal? Why are politicians going to have their day in the sun with this? Is this going to affect markets for the long term? Lots of interesting questions, guys, that I'm going to talk about right now. So, John Wu here, at John Wu here on Twitter, an $18 billion stablecoin is losing its dollar peg with all the magical chaos of algorithmic stables with a dash of Bitcoin systemic drama mixed in. Here is everything you need to know, the UST depeg thread. Now, guys, this is an in-depth thread explaining everything. So grab a coffee, get cozy, and listen up. UST is a dollar peg stablecoin that has depegged twice in the last few days, now hovering around 90 cents to the dollar. Just a reminder of how UST works. So, UST works in conjunction with Luna. You can always redeem Luna for UST, dollar for dollar, and vice versa. If Luna is at $50, you can redeem it for 50 UST. Similarly, you can redeem 50 UST for 1 Luna. Okay, so just to give you guys a sense of how it works. And he lists all the supporting documents here that I'm just going to go through. Again, I will link this in the description if you guys want to read further. It's worth noting you can always redeem 1 UST for $1 worth of Luna, even if UST is worth less than $1. It's meant to be a stabilizing mechanism. If UST is trading at 99 cents, arbiters can buy it and redeem it for $1 of Luna. We all know stablecoins require utility to maintain demand and defend their peg. So where does UST get utility? Simple, the Anchor Protocol. The Anchor Protocol is nominally a moneymaker, but the important thing is it pays you 19.5% to stake UST. A huge proportion of UST circulating supply is in Anchor. Right now, it's only about 40%, but it's been as high as 70+% historically. So why hold UST? Easy, because they're paying you about 20% per year to hold it. So there's incentive to hold UST. Two obvious questions, though. If someone is paying you 20% risk-free, why not just borrow a ton of money and make it pay you like 100+%? Oh, that's exactly what Abracadabra and DGenBox did. DGenBox and the rest of the Frog Nation DeFi ecosystem unwound in January, depegging UST and sending Luna from $100 down to $46. Sound kind of familiar? Something history may not repeat itself, but it can rhyme. How does one give out 20% of free money every year? Well, that's also easy. The Luna Foundation Guard, overseers of Terra's multi-billion-dollar ecosystem fund, will come back to that. First, we need to figure out what the Luna token does. I'm not going to focus on what drives its fundamental value and focus instead on the narrative. Every UST in circulation reduces the circulation of Luna. So he's going to give us some fundamentals here of how it works, and hopefully this will give you guys a better sense of what is happening in the market. The win scenario is every single Luna on Earth gets burned for UST. You can see the basic appeal. The more UST, the less Luna. Holders should want to diamond hands Luna. If there's unstoppable demand for UST and you're the last Luna holder on Earth, you have immense redemption power. It's right here on their website, and so he links their website there. That's kind of why Luna market cap is less than UST market cap is FUD. It doesn't matter what the total implied value of Luna is. What matters is the marginal value of each Luna that is redeemed for UST or vice versa, aka Luna's price. But what's even more important is the directionality and stability of Luna's price. It's a big problem if the advantage redemption price of Luna for UST is high relative to Luna's current price. So the mechanism of trading Luna to UST seems to be flawed. Let me slow that one down. So he goes on to say, Luna price high, Luna burnt, many UST minted. Luna's price falls, UST redeemed for many Luna. That's bad, okay? It's useful to illustrate using extremes. Say the price of Luna is $1 billion, then someone could mint 1 billion UST by burning a single Luna. And let's say the price of Luna falls to $1 for no good reason. That person could redeem their UST for 1 billion Luna. So the fundamentals kind of don't really make sense, do they? So suddenly, again, for no good reason at all, there's a lot more Luna in circulation being dumped on the open market. This, in essence, is what is happening today, guys, and this is why we are seeing the price of Luna plummet by huge amounts. Where is Luna here even on the chart now? Did I miss it here? I see Terra, USD. Where's Luna? Oh, right up here, 51, yeah, down 51.78%. But let's get back to the Luna Foundation Guard. UST has the same dynamics as any other algo stables, except in addition to the algo part, they also have LFG. In other words, UST is stabilized by contracts and the gigantic gravity well created by the size of Do Kwon's nuts. Okay. Previously, the LFG was in charge of the Anchor bootstrapping strategy. Take Treasury Luna, sell it, and flip it for Anchor Protocol Reserve, the big slush fund that pays UST stakers 20%. Every other L1 eco fund does stuff like this, just less directly. So here's what John Woo is betting. The bet, UST burn for staking. Luna price goes up, sell more Luna to fund the protocol reserve, and in the long term, UST takes off as a widely used stable before LFG runs out of money. Luna goes up to the moon, everyone is happy. This was all challenged though, back in January when Degen Box collapsed. That implosion took down a big push for UST to be used in a 10-figure cross-chain ecosystem headed by Danielle Sesta. That's when Jump, 3AC, and others piled into the $1 billion Luna OTC deal to buy Bitcoin. The story here, get the Bitcoin gang on board. Every cycle needs one crazy billionaire to go hard for the king. Number 2, give redemptions to USD, off-ramp it onto Bitcoin in addition to the existing UST and Luna one. Now, there's been a full weekend of gigantic 9-figure moves, market selling UST and pressuring the peg. And with all algo stables, the downside cycle is the opposite of the upside. UST is unstaked and dumped. UST depegs due to downward pressure. UST holders redeem for $1 of Luna. And then everybody dumps Luna. Again, guys, is why we're seeing it down 51%. What complicates things is all the Bitcoin in the treasury. So like I mentioned before, Luna just emptied their Bitcoin reserve wallet at $1.4 billion. Recall when the LFG was buying Bitcoin? Remember the 1 billion OTC news? That triggered a massive run-up in Luna, which allowed for tons of high basis UST minting. Simultaneously, the LFG DCA'd or down cost averaged into Bitcoin at an average price north of $40,000 per Bitcoin. Now Bitcoin is being driven lower due to macro and ironically expectations that LFG will be forced Bitcoin sellers due to UST peg pressure. Any redemptions of UST to Bitcoin will now be essentially booked losses for LFG when they could have just sat on stables instead. So now what's the plan? As of this morning, commit $1.5 billion to defending the UST peg, collateralizing against Bitcoin reserves. This is coming straight from the Luna Foundation Guard here. They tweeted this out on May 8th. Why? The deeper the liquidity, the harder it is for any one actor to dig out and move the price, even further away from $1. Continuing on, and this is a lengthy thread, but we're almost done here. Liquidity, peg defense, market making. That's why Jump Capital and 3AC are involved. They were part of the consortium that bought $1 billion of Luna OTC in February. They're deep-pocketed, sophisticated traders willing to do whatever it takes to prevent the UST death spiral. So what's next? Friendly market makers go to work on deploying a piece of the BTC treasury to market buy UST and keep the peg up. Hope is there's more falling knife Bitcoin collateral to LFG than there is bank-run pressure from people fudding UST. So possible outcomes, the treasury gets drained but UST stabilizes. For now, Bitcoin seems to have stopped dumping on liquidations and liquidation fears, bringing us to that stabilizing price point, right, of just about $30,000 for Bitcoin. As I mentioned at the top of this video, right, Bitcoin still, holding this support level. We are seeing that rebound. Just down here, the LFG also seems aware and intent on buying Bitcoin back at low basis. There's a win here. Bitcoin gets pressured to 30,000, which we are seeing now. UST peg gets restored, and as I mentioned, UST peg is going up. It was trading at 75 cents. Now it's hovering roughly around 90 cents, and LFG buys back into Bitcoin at a lower basis. So a great explanation here on what we're seeing with regards to Luna, how the relationship between Luna and Terra UST works, how this could have an effect on Bitcoin price, and how Bitcoin could actually stabilize at $30,000 based on some of the theories in this tweet thread. So I wanted to thank John Wu here for posting that, a very in-depth tweet thread, kind of giving us some context as to why we're seeing the market behave the way it is behaving. The other part of this story, though, guys, is stablecoins, and this is kind of the negative that I want to bring to you guys. Dennis Porter here saying, mark my words, the UST failure will be used as evidence by policymakers to regulate stablecoins to death and champion CBDCs. So he posted an article to that effect from Bloomberg, and I'm not going to read the full thing, but I will link it in the description of the video. I am going to go down here. I've already given you the explanation, but there are going to be market analysts talking about this. Here's a quote from Kyle Samani. It's fairly clear that there is a crisis of confidence. Kyle Samani's from Multicoin Capital. He added that it was not certain whether UST would survive, what raises the prospect of the current turbulence snowballing into one of the biggest crypto blowups in recent memory. Issuers of conventional stablecoins like Tether's USDT or Circle's USDC remain that their tokens are backed by real assets like cash or highly rated bonds on a one-to-one basis. These coins hold their peg because, as the theory goes, they can be readily exchanged for cash or highly liquid cash equivalents. By contrast, algorithmic stablecoins attempt to hold their value through a combination of instructions encoded in software programs and active treasury management. UST, which functions in tandem with a related token Luna, is the most popular and controversial of these kinds of tokens, and for the reasons I discussed in that tweet thread by John Wu. So to Dennis Porter's point, regulators are going to look at this and they're going to say, see, we need to regulate stablecoins. We need to have more regulation in the crypto market. And guys, that is not a good thing, especially if governments want to push central bank digital currencies for all those negative reasons that I've talked about on this channel. Some other things, though, that I found interesting from Tag XRP, I'll try to say it louder. HashiCorp owns Terraform Labs. Terraform Labs created the Luna coin. JP Morgan, Goldman Sachs, and Morgan Stanley acted as lead book running managers for HashiCorp, and HashiCorp is integrated with Alibaba. So there is actually a connection with JP Morgan, Goldman Sachs, and Morgan Stanley, the Luna coin, HashiCorp. So now, knowing this, does the rabbit hole get deeper, knowing that there are vested interests obviously wanting to regulate stablecoins, knowing full well that these organizations, these big banks in the United States, have helped create Luna and by extension UST coin? Could they purposely have thought that, this was going to behave and react in the way that it did? To give an excuse now to US regulators to put even more pressure on regulating stablecoins. All things that make you go, So just another theory there that I thought I'd bring to your attention. Super thanks to Tag XRP for bringing this up. And Tag XRP just linking the thread here, which I will link in the description of this video. So guys, when we're seeing markets tumble, when we're seeing a bit of a negative event, just remember, we still haven't broken new lows for Bitcoin. Yes, we are looking bearish. We are going to be paying attention to what's going to happen at this $30,000 mark for Bitcoin, because this, guys, this right now is dictating where the rest of the market is going. Gone, I think, is the theory that we are going to retrace to the 702 to the upside, see that altcoin rally. I think a lot of us are pretty disappointed in that we did not see the altcoins rally the same way we've seen them run in previous bull runs. Nevertheless, this is an ever-moving target. I'm going to keep my thumb on the market, guys, and keep you updated the best I can every single day. Jameel K's here also bringing this up. Reverse your psychology for crypto. So for those of you guys feeling upset, you know, your portfolio's down. Oh my goodness, my XRP is down to 52 cents, whatever it is. Oh, look at that. XRP's actually rebounded up. Let me just throw that on the hourly real quickly. Rebounded nicely here, coming out of that bullish pennant pattern. So we are seeing support being held so far. I'm crossing my fingers. Jameel K's, though, back to this. You will always have courage to position yourself early, just using the example below. Don't look at all-time highs, guys. Look at yearly lows. In 2012, Bitcoin's yearly low was $4. In 2013, it was $75. 2014, $200. 2015, $185. 2016, $365. 2017, $780. 2018, $3,200. In 2019, it was $3,400. 2020 Bitcoin's low was up to $5,000. And in 2021, the Bitcoin low was at $25,000 per coin. So to put things into perspective, again, yearly lows, Bitcoin still moving up. Cryptocurrency is not dead despite what they're trying to tell you. That's just my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.